Well, the problem is that both sides are really fundamentally convinced that they can win this. I mean, Trump feels that the Chinese economy is in a worse state than the American economy, whereas the Chinese feel that they can control the media, government, and society, and that they can withstand this. So this is the problem when you have both sides thinking that they can win this.
So what do corporates do at this point? Because many American companies have gone fairly deep into China and felt like they've got terrific relationships there, been picking up a lot of business. And now there could be this fear that because the Chinese are not coming up with a number that equals the $200 billion in tariffs that the Americans have come up with, there might be some other form of backlash. And that could be a tone that changes, a shift change in tone towards some of those American companies operating in the mainland.
Well, that's exactly right. As you know, China only imported 130 billion of US goods last year versus America's 506 billion. So they've said that they will respond with quantitative measures, but also qualitative measures. Now, I mean, quantitative obviously means matching dollar for dollar, but they can't do that. So what does it mean when they say qualitative? Well, what it means is that we can expect increased regulatory harassment within China and the potential of consumer boycotts. So we've already seen on the regulatory side China holding up the Qualcomm and XP merger. We will also expect to see border control hold-ups, delaying of licensing approvals. China can start to really harass companies operating in China, for example, holding up their production lines. We've seen with Apple recently, China's media started to bang the drum that Apple wasn't filtering banned content on its iMessenger service. This could be the start of more banging the drum against American companies.
Well, Joseph, let me ask you about self-help measures that corporates might take. I remember last week, as we closed the end of the week, we were talking about GM and how they're trying to get the Envision, this Buick SUV, exempted from the tariffs, and they've applied directly to the US government for that. They argue it's a Chinese-made vehicle sold largely in China. What do you think the likelihood is that the administration will listen to those requests, and two, that the Chinese government itself will not take the kind of punitive actions against GM that you've mentioned?
Well, again, very good question. So basically, on the US side, of course, we must bear in mind that about 12% of the top 100 companies doing trade from China to the US are actually American. 70% of China-US trade is with non-Chinese firms. So obviously, America putting up tariffs is going to hurt American companies a lot. And so I think if American companies can put in a good rationale for why they should be exempted, perhaps the Trump administration will listen. On the Chinese side, that's a little bit more nuanced in some ways, because China wants to, we saw previously with Japan, 2012, Korea last year, they really did start to, we really saw sort of build up in bellicose rhetoric, and the Chinese trying to launch sort of anti-consumer sentiment against these companies. It's a little bit different this time, and I think that's because of the fragility of China's economy. They're concerned that if they start to increase sort of economic nationalism, you sort of let the genie out of the bottle, and that could impact general sort of market jitters. We're already in bear territory with the stock market. The yuan is now fallen 7% against the dollar in the last couple of months. So there is concern that if they start to increase this rhetoric, it could actually really harm the Chinese economy. So I think they're holding off on that. And we've seen the government tell the media to tone down this rhetoric. And again, China wants to present itself as being pro-trade, pro-globalization. It wants to try and win allies. So it wants to present this sort of friendly face. And it also wants to sort of stabilize the economy and mitigate some of these trade war risks, whilst moving forwards with its sort of grander, longer-term development plans, which includes sort of opening up the economy and liberalization. And it needs foreign companies to do this. And so we may see a little bit less of the Chinese side really sort of pressuring American companies, except for maybe a targeted few exceptions.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.